JPMorgan Chase is the most powerful bank in the world and has a significant impact on the overall economy. That's why when the stock fell nearly 7% after announcing earnings, it had a lot of us panicking. The main driver for this decline was the disappointing guidance they gave on their 2024 interest income, only coming in at a whole $90 billion, which, yes, that was actually unchanged from their previous forecast. But, Wall Street always has high expectations. They expect you to increase your forecasted numbers by a couple $billion, just a small amount. But Jamie Dimon, he said, hell no. He said, we're going to keep our estimates right there at $90 billion. You guys better be okay with it. So, is it over for the big banks and the US economy? Are we gonna have to live in tiny homes? Heck, some of us may not even have a home after this year. But before we start panicking about tiny homes, let's just remember all the multiple ways that the big banks like Chase make money, because there's so many different ways they make money, whether that be interest income, when the interest on their loans to individuals or businesses have to take out loans, or to different governments, mortgages, credit cards. These are all ways that Chase collects interest income. There's also investment banking and underwriting fees, asset management for wealthy individuals, pension funds, of course, can't forget about insurance products, world domination, and so many others. Wait, what was that last one? In fact, what's happening at Chase may actually be a microcosm of what's actually happening in the markets right now. Inflation is not under control. There was optimism in 2024 that interest rates could be cut as many as 7 times. Now there's serious talks of not even a single one happening in 2024. High interest rates can hurt banks, as now they have less demand for loans, they have higher interest rates, so less loan origination volumes. There could also be increased borrowing costs and also just a higher chance at loans possibly defaulting. Though Chase only experienced about $1.9 billion in provisions for credit losses, which was considerably less than the $2.7 billion they anticipated, so that is great news. Their CEO, Jamie Dimon, actually said his company results were strong. Chase is a pillar of strength, just that investors need to be cautious about the future, with so many economic factors uncertain, such as overseas conflicts and inflationary pressures, as we just talked about. And this is exactly how the stock market works, guys. It's not, what have you done for me lately or in the past? It's, what are you going to do for me in the future? If one is a long-term believer in the US economy, any pullback on Chase stock could be an optimal buying opportunity. JPMorgan Chase is now trading below its 50-day moving average. Remember, this is a company that just raised their dividend to $1.15 per share. That's up from $1.05 previously. A company raising their dividend usually means the company is doing well and wants to reward their shareholders. Unlike other companies, Chase is actually limited in how much of a dividend raise they can give by the US government. This is to ensure they are always liquid, for all those bank runs when people just run to the bank and take out all the money because they lost confidence in the ever-collapsing banking system that the United States has. But don't you worry, that's why Chase ended last quarter with $29 billion in cash and cash equivalents on their balance sheet. And this includes treasury bonds. And now, a word from our video sponsor, Finvest. We talk a lot about investments on this channel that can go both up or down in value. But what about a way to invest in one of the safest asset classes in the world, in treasury bonds, which are backed by the good faith of the US government? Right now, one can earn up to 5.3% interest, as interest rates are at their highest peak since 2007. Finvest makes it super easy to buy treasury bills with just a few clicks on your phone. Finally, your idle cash is working for you while you sleep. Even if the Federal Reserve cuts interest rates later this year, the rates on treasury bills get locked in. So this might be an ideal time to lock in those rates before they get cut. And state taxes, they're actually exempt from interest income on treasury bills. Be sure to check out my referral link in the description to get started today. Going back to Chase's dividend history, we can see just throughout the years, Chase consistently paid and rewarded their shareholders. They may not have raised their dividend every year. Remember, they're limited by what the US government allows them to do, but has consistently went in an upward direction, and they just announced another dividend raise. And man, oh man, is Chase consistent. We can see that most analysts still believe Chase is a buy, with 12 ratings and 7 holds. With a price target of $189.11, there's a modest 3.45% upside from today's prices. Chase may not be the cheapest bank, but it is generally a beacon of safety, which is why investors are willing to pay a premium for it. Chase is a big player. It's like the captain of the banking team. It's one of the biggest banks out there, which means it's not only doing pretty well today, it's also done very well in the past. Banks like JPMorgan Chase are heavily affected by what's happening in the world around them. Things that they really can't control, but are going to have significant impacts on their share price. Things like interest rates, how the economy is doing, and rules set by the government that can all make a difference. And I know that's the real reason why Chase stock went tumbling this past week. It's because it had to report on the news, it had to be honest about what the actual outlook for the next 12 months are, and investors didn't like that uncertainty. Every investment comes with risk, every single investment. For JPMorgan Chase, these could be things like rules changing, people not paying back loans, or just the everyday ups and downs of the stock market. Full disclosure, I've been a JPMorgan Chase shareholder since 2018, and I've been rewarded quite handsomely. I currently own 24.49 shares for a total value of $4,400, and I've made over $1,500 on my investment, not including those juicy dividends they've been sending me every single quarter. So whether JPMorgan Chase is a great investment, it depends on your goals, how much risk you're comfortable with, and how well you think they'll do in the future. I'm somebody that was able to beat the stock market in 2023, and I'm currently doing so far in 2024 as well. Get access to my full $180,000 dividend portfolio by checking out the Patreon link below. It's a great way to help out a small-time YouTuber, in addition to hitting that like button and commenting what you think about Chase stock. My videos are always found in podcast form under the Collect Cash podcast name, and I will buy, stash, and collect cash you later.
I just exploded.